Hi, and welcome again to another edition of Market Analysis for today, Tuesday, November 26th. I'm Giovanni Benacour with Vantage Markets, and this is a recording about 10 minutes before the open. Okay, and basically what we'll be doing is just looking at the markets and giving a speculate on possible levels of support and resistances. Okay, so I'd like to also just talk briefly about what has been going around in the news that can obviously affect market volatility. We begin by the rhetoric around tariffs that just stepped up a gear. President-elect Donald Trump has been saber-rattling about levies for months, and late Monday provided more flesh on the bones. First up will be a 25% levy on imports from Mexico and Canada, promised to be delivered on his first day back in the White House in January, with a 10% additional tariff on China to follow. The rest of the world is certainly taking threat at face value. Asian and European stock markets tumbled early in the European early today as global investors appear to be rattled. However, there are reasons for U.S. investors to be worried too. Tariffs are inflationary, and particularly so when imposed on a country's neighbors to the tune of 25%. The Federal Reserve will be watching closely. Though Chair Jerome Powell has said the central bank will not make assumptions about Trump's policy changes until they are reality. Now, the personal consumption expenditures price index, the Fed's preferred inflation metric, is expected to show price growth edging higher than to an annual rate of 2.3% in October, when the data drops tomorrow. Now, their traders are more in favor than not of a December rate cut at the moment, but January is up in the air. There are just 9 days between Trump's inauguration and the Fed's January meeting. If day one brings fresh tariffs on Mexico and Canada, then expect a sharp market reaction and fireworks well into the new year. Okay, so let's see what will happen. With that, let's speculate in today's market fluctuation. We are in front of the Nasdaq on a daily candlestick chart. We see how yesterday's market fluctuation show a battle between bulls and bears, where the bears have won. Sellers came in and stopped marking from rally way beyond 21,000. That psychological, number, and so they were able to bring the price back below towards the medium of the 20-day of the Bollinger Band, which is the 20-day moving average. But also buyers came in and stepped in and said, "Wait a minute, not that low." But however, even though the market did open with a gap up, it was MU obviously was closed, but it still remained gap up, and that's what the fluctuation today in London session has shown, that the momentum to them because of the pressure by Asian stocks selling. We saw how the market did fluctuate to the downside after that news, but it has recovered so far. Now, so far, if we were to open right now and comparing that to the futures markets, we are basically right there on pair in the futures markets. We have fluctuated a bit higher towards that 21,000. Actually, this made a high of almost 21,000, and it has just continued to push lower. Let's see if we are able to continue that momentum to the upside. Let's see what will happen so far. Let's take a look at an hourly chart, so you can come in and speculate and read out some, look at the market fluctuation, how we see how the market has made this low, and we are in this hourly chart. We are basically, for those of you who like about alien wave, is this not the beginning of the fourth wave? Because we have waves one from making this low, past 2 hours, it went a low. Look at a double bottom here, so we can come and say, and we have 1, 2, 3 candles, consecutive candles with higher highs and higher lows. So we can say we are in an uptrend. Let's use this as a trend line. We see how the market has corrected. All right, 3 candles. Market never hasn't closed above the high from here at this point. So this is a correction wave, wave 2, and then wave 3 is in the making, or how we already come and found the high of it, and we are making a correction of wave 4, right? And then we usually have the Elliott wave has 5 waves, 2 that are corrective and 3 that are extensionary, that are moving to the upside. So we could be in the making of the 4th wave, which is a corrective wave. And how much of a correction do we usually expect to have? Well, we can use that Fibonacci retracement tool and measure that movement. Okay, and see. Okay, let me highlight all the. Okay, then we have those levels of Fibonacci. So a healthy retracement is usually to the 30.38% value, which is in 38.20%, and from here it should look to rebound, right? So we have the market moving towards that value. Will hit from here and then begin wave 5. So this is wave 1, wave 2, wave 3. I'm sorry, but wait a minute. So again, this is wave 1, this is wave 2, this right here will be wave 3, and then we are in the making of wave 4, and it should rebound from here. This should be wave 5. Would that be the case? That's one way just to analyze, read the market fluctuation, and then you want to have confirmation, right? So how will you confirm that the move? First, you want to see if the market has already began to reverse this previous lower swing at the 23.60%, which is basically right there, right? Or will it continue towards the 38.20%, just like we analyzed just now? Yeah, I should make that a bit bigger. Anyhow, so that's for the Nasdaq. Okay, let me erase these lines. That's for the Nasdaq, and we are in this at this moment we are in an hourly chart. So let's go back to the daily chart. And then we have the S&P 500. So again, market fluctuation, at least, but this is a bigger gap up yesterday on the S&P. And it will, as we open, we get it to open, we should, in the futures market, we are basically at par with the same fluctuation. So have we already create that low? Well, you can go in the daily, on an hourly, or even shorter, and look for that. But I'll say we're going to be opening to the upside. Now the Dow is a bit different. It is in the red, okay. But so far, the market seems to be rebounding in the futures market. So it made up a low of 44,650. So somewhere around here, come up the same as the CFD, and it rebounded so far. So let's see if it will continue to move towards the 45,000, which is a psychological value. Crude oil seems to be rebounding. It's actually right there at that level of resistance that we placed yesterday, last night actually. So we came and kissed it, retraced from it. All right, RSI is borderline 50%, actually below 50, So far, the yellow line, if you are wondering, if you noticed that there's a yellow line in the RSI, our market just opened, and that yellow line is the RSI based MA, the plus values between 0 and 100, which is similar to the RSI itself. And traders can use the typical RSI levels such as 70 overbought and 30 oversold to identify potential entry and exit points. That's basically what that is. It's just now a lot of people use this one, the yellow one, to measure volatility in the cryptocurrency. So that's also why it's there. It's mostly is added now because of the cryptocurrency. So you can use that to actually come in and measure a previous move better, because you see so far it's flat, and the RSI itself has fluctuated up. It was below it, it was above it, it's rebounding again from it. So are we gonna see the yellow separate from it, or are we gonna see the yellow, make a curve with the RSI towards the higher 70, telling us that momentum to the upside is picking up, right? Because right now momentum to the downside is the one that's winning. So we could say that the market is looking to range, has defined its range between 69 and 69.700, or will it continue to move higher, or will it trend lower from 69? So these are opportunities to study, identify, look at demand and supply, and see if that will be going to a lower time frame and see what's happening, what patterns are being formed. Then we have here Nat Gas. Nat Gas is going to be continue to build up on demand. All right, so 320 seems to be that level where the market seems to be finding that resistance of sellers again, because as we move, the market moves higher. The resistance is an amount of sellers looking to overwhelm the buyers and change direction, and the support is a higher or overall well of buyers to take in, absorb the sells, all of the sell orders, short orders. So that's, so far the bulls are winning this battle because they're sustaining the price above yesterday's low. Now let's see if we'll be able to break that 320 and fluctuate to the upside. I'm still bullish. So okay, gold. Right now we're in a doji, so we're in balance right now with basically what's happening with yesterday's just tremendous drop. Now, had this drop caused a more panic and sell, then we most likely would have seen a bigger fluctuation. I mean, if we were to measure this by eye, I would say, yeah, almost half of yesterday's drop so far today. So will that 2600 serve as that psychological support level for gold, and from here looking to rebound? Okay, has this movement so far been 100% of the previous move? No. Okay, are we beyond halfway? Yes. So is it a good idea to come in and say that the market will actually reverse from here and move higher? Well, a lot of things obviously have to happen, but gold will continue to stay being one of safe haven assets of all time. It doesn't matter if Bitcoin comes in and pretends to take its place. Gold was there before Bitcoin. It will always be there after Bitcoin, because for Bitcoin you gotta do is just turn off the light, not for gold. So still bullish on gold. Then we have here silver. Again, so I'm being bullish with silver. Always the demand of it, the usage of it, industrial usage of it, rebounded at a $30 round, the psychological round number, so push to the upside. Being long, copper is the one that, yeah, I mean, has had nice strong drops, but at $4, that psychological round number, it was tested, and we have rebounded from here. Had this been a dead cat bounce, well, the market could still make it, I mean, or will this indecision just take us to just fluctuate around above $4 and just continue to do this thing? Now, one thing that you may want to understand, that if the market enters into a trading range or lateral movement, as I call it, a setup for a breakout is being made, right? So you want to be able to see when will this curve end. Will come here and just continue to do this, or will it come and do as follow, fluctuate and do this? Okay, so here's a decision you want to make, or will it continue to do this? So that's, I guess, 3. My decision will be, I will be in favor of being long, even though it has obviously taken some beating, but hey, the usage of the metal is not going to go away. The demand of it. Now, Bitcoin is fluctuating strongly after kissing 100,000, but if in the futures market, it was shy of about 625, sorry about that, 625, shy from 100,000. So again, it's not if, but when. So here another example, or look at how the usage of the RSI in the crypto is different from the other assets. As you see this shadow when the line is above the 70 marker, it highlights. It gives you a better view of that momentum or that impulse in the market being done in there. And you can obviously come in and use your momentum oscillators that you want to come in and use. For example, the ADX is one of those very good indicators that shows you or directs you to the direction of the impulse, whether it's up to the upside in green, or if it's not to the downside, it'll be in red. And it has two lines, so the DMI positive and DM negative, and when they cross, that's a confirmation of the direction of the move of the direction of the market. So take a look at ADX. I'll do a webinar on it in the future. All right, so far Bitcoin, is about when, not if. So being bullish with Bitcoin. The currency is the euro, or the euro. Take a look at the euro. So euro's looking strongly to get back up above 105. Is steadily recovering from such a strong drop, because obviously the dollar index it picked up in value. Obviously it started moving up above 107. So hey, that obviously took a beating. The currencies took a beating on that. So how will this happen? I mean, how will this continue? Have we found a bottom being printed last week around the 103 with all these things about tariffs and whatnot? Well, we'll see. So far, what I'm gonna speculate is that we are gonna that the euro is looking to stay north of 104 and just climb above 105. So confirmation will be obviously when you see the euro at least going back up towards the 106 level. But by that time, what would the dollar index would be doing? Obviously, that's another point to see. Now, then the pound also having that lower fluctuation on its chart. So let's see what will happen. And the dollar index is the one that also looking to fluctuate lower, obviously after making that 108 move to the upside. So let's see, let's use this previous support level that should be working fine. Let's leave that as an all-time high and as the resistance. So it has been recovering. Let's see if that momentum, and you could also have this chart and another chart side by side, for example, that have a correlation between obviously the dollar index and gold or Bitcoin or the other currencies obviously as well. Because if whatever you see moving as it moves down, or the move to the downside, you'll see pressure on the other or valuation, which is what we're seeing on the pound end, basically mostly on the euro, that it has been in the green and the dollar is in the red. So, but vice versa is obviously that low that was created. We see the dollar index strongly to the upside, and then we'll see on the same day gold and the currencies pushing lower. All right, that's it for me today. Have a great trading day, and I'll see you tomorrow.